Anyways, welcome YouTube to Millennial Markets. This is Jacob. This is Jared. Today we'll be describing and talking about AMD. I'm not a personal holder of AMD, however Jared is. So with that being said, I'm going to kind of let him take the reins on this video, describe his bull thesis as to why he owns AMD. We'll look at a little bit of news about it, what's going on with the company. We'll look at some financials of the company, and then at the very end we'll do a DCF on AMD to determine if it's undervalued in my personal opinion and on my analysis.
So AMD is Advanced Micro Devices, and they operate as a semiconductor company worldwide. My cost basis when I first got in was 105, and we'll get to that when we go over the DCF, if that was a good deal or not. But what I was really confident in was the growth that was shown and how they will grow with the news that has come out recently. So a little insight about AMD if you're not too well aware. AMD does operate in computing and graphics, so their CPU and GPU for work at home, business PCs as well as gaming PCs. The most common GPU that you will find is that AMD Ryzen. If you know anything about AMD, you've probably heard that before. Now that Ryzen, that is that GPU processor. Make sure that that PC does run smoothly and look real good. But on a more serious note, they did recently acquire Xilinx, and Xilinx was another semiconductor company. Xilinx stockholders, they receive a 1.72 share of AMD common stock, cash in lieu of any fractional shares. Jacob, I know you can kind of explain that a little bit better than I would if you'd be able to for the video.
Yeah, so AMD acquired Xilinx in what is considered to be a stock-for-stock acquisition, meaning that when AMD acquired Xilinx, the Xilinx stockholders received AMD shares in return as compensation for the acquisition of the company. With acquisitions, it's important to take note in that a lot of acquisitions and mergers tend to actually be unsuccessful, and that the synergy between the two businesses is not as fluid as one would have anticipated before that merger or acquisition had occurred. And so with Xilinx and AMD, it's expected that the synergy between the companies will grow at a more rapid rate than the two companies individually off on their own.
And the reason why I like AMD acquiring Xilinx is because now they've broadened their product portfolio, and now they're able to reach a higher volume of customers in a more diverse way. Basically, not only with them adding that AMD processor to your Series X and your PlayStation 5, as we move forward in a more digital world, I really do believe that high performance computing and graphics is going to be the center of how we live our life. And AMD, as their growth, when we were looking at their income statement balance sheet, just looked like a good growth or projected growth in my, I guess, from what we saw, projected growth that I was really comfortable with. But sorry, as we're going, so one article I found, it did state that AMD's revenue surged 68% in 2021. Now, of course, we all know a lot of companies, a lot of their numbers are, I wouldn't say skewed, but what's the word I'm looking for? Just a little off because of, COVID, work from home, everything in the economy that's been happening. And the reason why I think, why AMD over Intel or Qualcomm for that semiconductor business, the reason why I think that is because not only are they, in my opinion, the best, but how well they're able to make those in the Taiwan semiconductor manufacturing. But I know you had some insight on that as to why you find that not a good sign. No.
I never said it wasn't a good sign. Actually, in fact, I really like AMD as a company in and of itself. It's going to grow at what seems to be a good clip, and that's well done for a number of reasons. First one being, macro speaking, is that the semiconductor market is expected to grow substantially in the upcoming decade. AMD is going to be at the forefront of that. They're actually taking market share from Intel, which is a company I own. And they produce good products. They outsource to Taiwan Semiconductor because they don't have the facilities to produce the chips themselves, from my understanding. But overall, I really do like the company. I think Lisa Su is actually a phenomenal CEO. I would put my trust in her if I believe that AMD at the current price was in fact undervalued. So I wouldn't say there's really much going on sketchy there, because there are some sketchy managers out there, guys. Beware. So we'll start off kind of looking at the financials of the company here. So if you look from 2018 to 2021, the past 4 fiscal years, AMD has grown consistently in revenue. Their gross profit ratio has also continued to go up, which is a good sign. Now, from the year 2020 to the year 2021, there was an absolutely massive increase. What you said it was like 68%? Mm-hmm. It looks about 68%.
Yeah, I mean, you're 9.7. Sorry, what am I? 9.7 billion to your 16.4 billion.
Yeah. But again, like Jared kind of mentioned, so there's a lot of economic reasons as to why that happened. So first of all, I'm pretty sure GPUs were 150% of what their retail price was supposed to be because of the chip shortage. And so a lot of their income, that increase in revenue, came due to the fact that the price of chips increased, or at least for those particular ones, increased by nearly 50%. And so when you're looking at the growth of a company such as AMD, it's important to note that the increase from 2020 to 2021 is just simply not sustainable, and they have to kind of take it back and look at it from a more realistic perspective. Although with that being said, they are growing revenues, even with that being said, at a very solid rate. And then if you go down to their net income, they're also growing along with the revenues, which is great to see. If you're increasing the amount of revenue that you get as a company, you would then in turn expect that the income also rises with that as well. And they've increased their net income ratio substantially from about 5% to around 20-ish% this past year. I expect that to continue to climb, and if not climb, at least remain stable as the business continues to operate. Down here on the balance sheet, we have cash and cash equivalents at about $2.5 billion, short-term investments at $1 billion, and net receivables at about $2.7 billion. If you go on a quick ratio here and you look at their total current liabilities, you'll see that they have $4.24 billion in liabilities. With that being said, it looks to me as AMD has a lot of current liabilities to pay off, and they don't particularly have the cash and the current receivables to pay that off. They do have the receivables in addition to their cash and their short-term investments to pay off that, but they'll be a little bit cash-strapped, so I'm expecting a little bit of dilution there. I think I read something that the AMD had decided that they were going to dilute for the next few quarters at least to kind of probably pay off that debt and whatever reasons that they have. But on the other hand, on the flip side of that, their total liabilities, this includes the long-term liabilities as well, is only $4.9 billion. So almost all of their debt has to be paid off this year. Once they pay off that debt, they'll have very little left to pay off. And so once that cash starts to go up in the next coming years after they've paid off this debt, this company will be very attractive from a balance sheet perspective. As for the cash flow statement, their cash flows are increasing. Their cash flows from operating activities are increasing. Their capital expenditures are increasing. They're obviously looking to expand the business by doing capital expenditures, as any other business does for the most part. And then their free cash flow has also improved. And the funny thing about this free cash flow is that it went from $770 million to $3.2 billion. I'm not exactly sure if that is sustainable as well either. So when we look at the DCF, we're going to kind of take those numbers back a notch and look at it from what may be a more realistic perspective looking forward. So I took here's the discount free cash flow analysis that I have here. I took the numbers annually from the years 2018 to 2021, and I input them, and from there I kind of got a income margin that was from 5% to 20% as we had discussed. And so when doing the DCF, I use an income margin of about 20% because that's what I'm expecting AMD to do. As for the free cash flow equity to their net income, this is kind of where it gets questionable because the free cash flow is so variable. It's negative 40% in 2018, 80% in 2019, 31% in 2020, then all the way back up to 100% in 2021. And so free cash flow analysis is really only viable in very predictable companies. So if their numbers aren't predictable, it's really hard to project forward. And so with it being said, I just used a free cash flow to net income percent of about 80. And that was their 2019 numbers before COVID occurred, before the economy just really got rampant. We saw this inflation. And so presumably they would be performing as if they were in 2019 going forward. I used a growth rate of 15%, and I know there's a lot of AMD bulls out there. They're like, well, AMD is going to grow 20, 25, 30% a year. That's true. Maybe that is the case. However, when you're doing your analysis, you want to be conservative because these numbers, when you're projecting outward, are incredibly sensitive to those changes. And so I like to use a more conservative growth rate. And the growth rate that I chose was 15%. So lower than 2020 and lower than 2021. But a little bit greater than their earlier years. I did a discount rate of 12.5%, perpetual growth rate of 2.5%, and when it's all said and done, actually, before I go to that, if you look here at line 12, the shares outstanding as of 2021 were 1,207, but as we discussed earlier, the stock for stock acquisition, there was an increase in the number of shares outstanding because Xilinx. And so the current shares outstanding is 1,410. And so this is the number that I use for the shares outstanding when dividing the fair value of the company by those numbers, because that's the current outstanding shares for the company. And it's not really reliable to use the 2021 because there's literally a 20% dilution. Anyways, at the end of that, I got a fair value of $151 billion and a price per share of $107.50. I use a margin of safety of 10% for most companies. And at the very end, I get a price per share, a fair value of $96.72. The current price of AMD is 92.65. So based on this particular analysis, it appears that AMD is somewhat slightly overvalued. If you were to plug in a growth rate of, say, 20%, we can look at how those numbers change. You get a fair value of about $105. If you think that their free cash flow to net income is going to be, say, 100%, you get a fair value of about 131. So I used the conservative numbers, wasn't using the true projections that AMD bulls like to use, and you still get a fairly decent price. So in my personal opinion, okay, I can understand why some people might buy this. They're not paying an exorbitant amount of money to buy the company. Yeah, that's what I got to say.
Yeah, so when I did purchase, like I told you in the first video, definitely a FOMO, fear of missing out, kind of mentality I had at the time. So I would say I did overpay in fact, but going over this, changing the numbers and actually being conservative with it, I'm actually able to see that fair price, and I gotta say I'm not disappointed. It is a messy financial statement, but I do see growth with the company, and I am still very confident even with the information.
Yeah, I mean, the company isn't absolutely massive, so there are going to be larger fluctuations in the company I own, such as Intel. But as Jared just said, so FOMO, fear of missing out, this is a plague that runs in the market. Let me tell you guys, I mean, the number of people I've seen absolutely get slaughtered. Jared, I have seen many people lose their life savings due to FOMO because they'll go, particularly in the foreign exchange market. Anyways, never have like the fear of missing out, because over time stocks almost always go back down to their intrinsic value. that's particularly not the case with, say, Amazon, for example. But for the most part, most stocks will go down and they'll fluctuate above their fair value, below their fair value. And so it's the job of investors to look for when that fluctuation goes below that fair value, and then you make your purchase price. So even if the stock's going up, right, well, the cost you're paying for the share of that company is also going up. And so you're paying more and more and more for that little bit of earnings that remains relatively consistent. And if it's not growing at that rapid pace, but along with the price of the stock, well, you're going to be in turn overpaying for a stock. And I've always found it better to just sit there, relax, wait back, and wait until it's a fair value. Because I've gotten burned before, particularly off of Snapchat, which is, by the way, guys, was an awful investment. It was the first investment I ever made. I lost money. Never want to do that again. And doing stuff like this definitely helps you weed out some of those terrible stocks like Snapchat was back in, what was it, 2017, whenever they went public. I bought the IPO, dude. Yeah, talk about it. Alright guys, well, I think that's the video right there. We appreciate you tuning in. I hope you had a good time watching us and looking at the fair valuation. Make sure you do your own due diligence on AMD if you do decide and in fact want to buy. We are not financial advisors. Please take whatever we say with a grain of salt. And with that, have a very green day.